minutes to the May meeting say a patient approach to rates is appropriate, quote, for some time. The first time that I know that they've actually put a time period on this idea of a patient approach. They say a patient approach is warranted to rates, quote, even if global economic and financial conditions continued to improve. And there was in the minutes expressed growing concern about low inflation. Some view the downside risk of inflation as having increased. Several members of the committee said they are concerned if inflation doesn't rise in coming quarters, that there was a risk that inflation expectations could get anchored below 2%. That's a concern for the Federal Reserve. And that suggests maybe after a certain time, if inflation does not come back in coming quarters, they might be considering actual rate cuts to address it, though the minutes do not say that. And a few on the committee worry there's more slack in the economy than the data might suggest. That said, the minutes say that most on the committee see inflation near a 2% target, a strong labor market, and a continued expansion as, quote, the most likely outcome. And that the recent run of low inflation was attributed mostly to transitory effects, a sign that they expect inflation to rise in the coming quarters. It's worth noting that a few on the committee also see rate hikes, that's a few on the committee, see rate hikes if the economy comes in as they expect. They worry that inflationary pressures could build quickly. On growth, GDP is seen likely to moderate from a strong pace of last year, but a number also marked up their GDP forecast because of that strong first quarter. Some said because of the waning fiscal stimulus and prior rate hikes, growth would slow. That was the general view on the committee compared to last year. That is, there were signs of stabilization in the housing market. And remember, this was before the recent round of trade of tariffs put in place. So the concerns from earlier in the year about global growth, tighter financial conditions, they had eased. And just very quickly, the Fed is discussing two options for its multi-trillion-dollar balance sheet. One would have mostly short-term securities. The other would have a kind of tenor that would be very similar to the amount of treasuries outstanding, and that's where they seem to be agreeing upon.